Traders at Access Bank say thin liquidity is driving a bearish market run. Meanwhile, following the release of the OMO auction results this week, bids are skewed towards the mid to long-term maturities, with emphasis on the May 2033 and March 2050 bonds. Ebube Uneze, Treasury Team Member at Access Bank, joins me now for more market movement. Ebube, thanks a lot for joining us on the show today. Walk us through the auction result, the OMO auction result we had for this week's 500 billion naira offer, subscription levels, allocations, and then details around the stop rates.
Thank you, David, for having me. So as you rightly mentioned, yesterday we saw the central bank come into the market to conduct an OMO auction, where a total of about 500 billion was on offer across the standard maturities. Total subscription at that auction was about 737 billion, largely on the 362-day bill. And we saw the central bank sell a total of 731 billion on that maturity. So we saw stop rates closing at 20.32% for that particular bill.
And in terms of how investors are also positioning across the T-bills and bond curve now, and then the yields at this point in time, walk us through some of these details here.
All right, thank you, David. So the impact of that participation in the OMO bill, we've seen a lot of foreign portfolio investors come into the market to take advantage of the high yields we see on the OMO bill. Consequently, today in the market, especially on the foreign exchange market, we saw a lot of liquidity coming into the market with rates trending significantly downwards from the opening levels today. At the start of this week, we saw the NIFEX print at about 1673 to close yesterday at about 1659. The indications are that by the close of business today, we should see the NIFEX print lower than 1659, which is an indication of an improvement in supply coming from the OMO auction, which we witnessed yesterday.
And in terms of liquidity as well, now looking forward, how do you see the position getting? Thin liquidity has been the order of the day for a short bit.
Yes, so as you rightly pointed out, at the start of this week, we saw a market liquidity open and in a credit of over 700 billion. But this week, we've seen the central bank maintain its hawkish stance, mopping up liquidity through the OMO auction, as I had earlier mentioned, CRR debits, and of course, an FX intervention on Monday. So we've seen system liquidity move from a credit balance to a debit position of over 500 billion. And as such, we've seen money market rates inch upwards by over 500 basis points from about 28% to over 33% at our close of business yesterday. So going into next week, we still expect the market will still be tight, owing to the anticipated NTB auction. And we still also expect that some of these CRR debits will still continue into next week, and as such, system liquidity will still be tight and money market rates at elevated levels.
Exactly. Well, we'll have to keep our fingers crossed to see how things pan out. Ebube, thanks a lot for your time on the show today. That was Ebube Uneze, Treasury Team Member at Access Bank.